Hello, welcome to revision of leverage today first. First we will revise leverages and then we will take some very important questions. Okay, are you ready?
Yes, sir.
Yes. So write down. I will give you all the formulae required in this chapter at one place. So what is leverage? Use of one financial variable to influence the other financial variable. How many types of leverages are there? 3 types of leverages. Leverage is the study of risk. So one is operating leverage. It deals with operating fixed cost. It deals with operating fixed cost. It measures business risk. This was first one. It measures business risk. It measures impact of change in sales on EBIT. Okay. So it connects two variables, sales and EBIT. How much sales would impact EBIT? Formula. First formula is percentage change in EBIT upon percentage change in sales, and the second formula is contribution upon EBIT or contribution upon sales minus contribution upon contribution minus operating fixed cost. So sometime you have to find some missing figure, so you should know what is EBIT, contribution minus operating fixed cost. Is it right? Then another formula, related formula, which you have to know for solving the question. Percentage change in sale sales multiplied by operating leverage will give you percentage change in EBIT. Correct? If sale changes by 1%, operating leverage is 5, EBIT will change by 5%. Then percentage change in sales is equal to percentage change in EBIT divided by operating leverage. Reverse. If percentage change in EBIT is given, operating leverage is given, we can find out the percentage change in sale. Then we have profit volume ratio. Profit volume ratio formula is contribution upon sales into 100. Then we have break even point. Break even point in units is equal to operating fixed cost divided by contribution per unit. Break even point in rupees is equal to operating fixed cost divided by profit volume ratio. Contribution equal to sales minus variable cost. Sales minus variable cost. EBIT equal to contribution minus operating fixed cost. Contribution minus operating fixed cost. And then you can play around this formula. Okay? Yes. Say yes. Yes. Please note down, those who are interested candidate, please note down. Right? One more write down. One more write. Percentage, write down break even sales into PV ratio will give you operating fixed cost. Will give you operating fixed cost. So sometimes they can ask you this also. Is it right? Then write down one more related formula. Margin of safety. Margin of safety sale is equal to actual sale minus break even sales. Margin of safety percentage is margin of safety divided by actual sales. Margin of safety divided by actual sale. Operating leverage is 1 upon margin of safety percentage. Operating leverage is 1 upon margin of safety percentage. So sometime in some question margin of safety will be given 0.5. So 1 divided by 0.5, it means operating leverage is 2. Is it right? If there is no fixed cost, operating leverage will be 1. If there is no fixed cost, operating leverage will be 1. If sales are greater than break even point sales, operating leverage will be positive. If sales are below break even point sales, operating leverage will be negative. All these basic points you have to keep in mind. one day before the exam, you can just quickly revise. If sales equal to BP, operating leverage is undefined. Operating leverage is undefined. If sales equal to 0, operating leverage is 0. Operating leverage is 0. Is it right? Up to this you have written. Now write down the heading. Point number 2, financial leverage. Financial leverage. It measures the impact of change in EBIT on EPS. So here we have EBIT, here we have EPS. Financial leverage deals with the change in EPS due to change in EBIT. It deals with fixed financial cost. For example, interest and preference dividend. It is an indicator of financial risk. Financial leverage is an indicator of financial risk. Higher the financial leverage, higher the financial risk. Higher the financial leverage, higher the financial risk. Any query on this discussion till now? So now we'll see the formula. Have you noted in good handwriting? One day you have to revise also. So if you are having less time before the exam, these notes you will revise. Okay. Higher the financial leverage, higher the financial risk. Now write down formula. Financial leverage equal to EBIT upon EBIT minus interest minus preference dividend upon 1 minus tax rate, or degree of financial leverage is percentage change in EPS upon percentage change in EBIT. Interpretation. Interpretation of financial leverage. If EBIT changes by 1%, by what percentage EPS would change? By what percentage EPS would change on the screen? Any query? If there is no preference dividend, if there is no preference dividend, then financial leverage is EBIT upon EBIT minus interest, or you can call it EBIT upon EBT. Is it right? But please remember, if you have preference dividend, use the main formula at the top. Percentage change in EPS if you have to find, then you will take percentage change in EBIT multiplied by financial leverage. Many times in the exam they will give you, if EBIT changes by 10%, by what percentage EPS will change? So 10 multiplied by financial leverage. Reverse also, if EPS doubles means EPS increases by 100%, then by what percentage EBIT should change? So reverse working also we can do. Percentage change in EBIT required will be percentage change in EPS upon financial leverage. Is it right? If they say that if you have to bring EPS down to 0, bringing EPS down to 0 means 100% decrease in EPS. Then you will apply this formula and find out the decrease in EBIT required. Okay. You can write DFL, you can write FL, doesn't matter, right? Now next is financial break-even point formula. Financial break-even point means that level of EBIT at which EPS is 0. That level of EBIT at which EPS is 0. So this is equal to interest plus, come on, preference divided by 1 minus tax rate. Is it right? Now write notes. If EBIT is equal to financial break-even point, degree of financial leverage is undefined. Is it right? If EBIT is greater than financial break-even point, then degree of financial leverage is positive. In bracket greater than 1. Greater than 1. If EBIT is less than financial break-even point, DFL is negative. If EBIT is equal to 0, what will be DFL equal to? 0. EBIT upon EBT. If EBIT numerator is 0, answer will also become 0. If there is no interest or preference dividend, if there is no interest or preference dividend, degree of financial leverage will be equal to 1. Degree of financial leverage is equal to 1. Note, if question states that EPS doubles it means 100% increase in EPS. If the question says that EPS will double, it means 100% increase in EPS. Again write. If question says EPS becomes 0, if the question says EPS becomes 0, it means EPS will decline by 100%. It means EPS will decline by 100%. Next note write down. For each level of EBIT, DFL will be different. For each level of EBIT, DFL will be different. Then write down, as EBIT increases, DFL decreases because risk reduces. Okay, right. So this was about financial leverage. Now write down point 3, combined leverage. It measures total risk. It measures the impact of change in sales on EPS. That means this will measure if sales changes by 1%. So what is the interpretation? If sales changes by 1%, by what percentage EPS will change? By what percentage EPS will change? It considers both operating and financial risk. Okay? It considers both operating and financial risk. Keep writing if you are interested, if you want full marks. It considers both operating and financial risk. Now I'll give you formula. Combined leverage is equal to percentage change in EPS due to, come on, percentage change in sales, or operating leverage into, come on, financial leverage, or What is the formula for operating leverage? Contribution by EBIT. And financial leverage, EBIT divided by EBIT minus interest minus preference dividend upon 1 minus tax rate. So EBIT will cancel. So you can just write contribution divided by EBIT minus interest minus preference dividend upon 1 minus tax rate. I repeat last formula, contribution upon EBIT minus interest minus preference dividend upon 1 minus tax rate is right. So these are the three types of leverages. Leverages are the study of operating risk, financial risk and total risk. Higher the leverage, higher the risk. Lower the leverage, lower the risk. So investors can take investment decision by looking at the leverages. Write down few more lines. Have you noted up to this? So write down percentage change in EPS equal to percentage change in EPS equal to percentage change in EPS equal to, right below, percentage change in EPS equal to, this they ask you so many times, is percentage change in sales multiplied by combined leverage. Percentage change in sales required will be equal to percentage change in EPS upon combined leverage. Right? Keep writing. Good student will write. Today before you sleep, revise also. Now write down operating leverage equal to combined leverage divided by financial leverage. Highly tested in the exam. Okay. One more write. Financial leverage equal to combined leverage upon, yes, financial leverage is combined leverage upon operating leverage. So sometimes they will give you two ratios, you can find the third one. Is it right? Then write EBT equal to EAT upon 1 minus tax rate. Reverse working question. From EBT, from EAT you have to find EBT. Is it right? So you will be able to do it. One more formula, EPS equal to, in some question you will be asked to find EPS, PAT minus preference dividend upon number of equity shares. Is it right?
Yes, sir.
Say yes or no. Yes. So this was a quick summary of leverages. Now we'll practice important questions. Are you ready? So take out our book and we are going to solve important study material RTP, MTP and exam questions. Okay. So I will solve question number 13, basic question for understanding purpose. Source is May 2018 RTP exam. Calculate the operating leverage, financial leverage and combined leverage. So this is for checking how to apply the formula from the following data under the following situation 1 and 2 and financial plan A and B. Two situation and two financial plans. Installed capacity is 4000. You have to look at this capacity, actual production and sales. Actual production and sales 75%. So 75% means how many units? 75% is actual production of installed capacity. So 75% of 4000, 3000. Selling price 30, variable cost 15. Fixed cost situation 1 15,000, situation 2 20,000. Capital structure also have two financial plans, equity and debt. In plan A, they are equal 10,000, 10,000. In plan B, equity is more, debt is less. And what is the rate of interest on the debt? 20% for calculation purpose. So how many answers would you require? How many answers would you require? 4 answers will be required. There are two financial plan and there are two situations. So 2 into 2, 4 combination will be there. Situation 1 plan A, situation 1 plan B, situation 2 plan A, situation 2 plan B. So we'll solve in one table or 4 tables? One table. Okay, one table. I know. I was just testing you. Calculation of operating leverage, financial leverage and combined leverage. And combined leverage.
How does fixed cost affect the leverages?
How the fixed cost will affect leverages, you will see in this problem. Very good. So you first write down situation 1. Under that write down plan A, plan B. Then write here situation 2, plan A and plan B. Okay. So first point A, write down sales quantity, which will be 75% of 4000. So 3000 in each column. Okay. Point B, sales amount at the rate of rupees. This question they have asked in the exam also in previous years. So sales at rupees 30 per unit. Okay, sales at rupees 30 per unit means multiply 3000 into 30. So that will be 90,000. write down 90,000. Point number C, write down variable cost at the rate of rupees 15 per unit. 15 into 3,000, 45,000, 45,000, 45,000, 45,000. Any query till now?
No, sir.
Point number D. Format is same. Contribution B minus C. So this will be 45,000, 45,000, 45,000, 45,000. So far it is right. So point number E would be operating fixed cost. In situation 1, operating fixed cost you will see in the question center of the question 15, and in situation 2
Sir, it is 20,000.
it is 20,000.
Yes, sir.
Easily understandable.
Yes, sir.
Point number F, write down EBIT D minus E, that is 30,000, 25 again 30,000, 25,000, 25,000. Point number G, write down less interest. In interest in plan A, first column is plan A, interest will be 20% of 10,000. 20% of 10,000, 20% of 10,000, 2,000, and in plan B it was 20% of 5,000. 20% of 5,000, 1,000. In bracket write 20% into 5,000. Same thing repeat, 2,000 and 1,000. Okay. So what will you get now? EBT. First column 28,000, second 29,000, third column 23,000, fourth column 24,000. Is it right? Any query on this basic working?
No, sir.
Then write down point number I, operating leverage. Operating leverage is, what is the formula? Contribution upon EBIT. Contribution is point number D and EBIT is point number F. So D by F, student will take the calculator. D, and this is F.
1.5.
So 1.50. Okay.
1.5.
Next one, same 1.5. Next one, 1.8, 1.8. Situation 1, 1.5. Situation 2, 1.8. Point J, write down financial leverage. Financial leverage formula is EBIT divided by EBT, F by H. F by H. F by H. So this is line number H. Try.
Financial leverage.
Just answer in 2 digits. 1.07. Okay. Answer in
1.03.
03. Okay.
1.08.
1.08.
1.08. 09 होगा. 1.04.
1.04. Last one. 1.08 or 0.9 is okay. You can make it 0.9. Point number K, write down combined leverage. Combined leverage means operating leverage
into financial leverage.
I into J. Just multiply the last
So
two.
1.605.
1.605.
Sir, 1.545.
1.545.
Sir, 1.962.
1.962.
Sir, 1.872.
1.872. Identify which is the highest combined leverage.
Sir, 1.972. Situation 2 planning.
Highest. And which is the lowest.
Sir, situation 1 plan B.
So when is the total risk high? When you are using high fixed cost. Can you see the fixed cost is also high here? Out of the two fixed cost, 20,000 is high. And out of the two, interest 2,000 is high. So when both are combination of high, combined leverage will also be highest. Whereas in plan B and situation 1, interest is also lower of the two and operating fixed cost is also lower of the two. So therefore, if both operating fixed cost and financial fixed cost are on the lower side, combined leverage will also be lower. Combined leverage will also be lower. Do you agree? Say yes, we agree. Sometimes they will ask you in the question, identify highest and the lowest risk. Situation 2 plan A is the highest risk. Situation 1 plan B is the lowest risk. Okay. So if they ask you to identify, you can do that. Dear student, please come to question number 2. This not question number 2. Just go to your November 2022 exam question. One question from November 22 exam we will take. Question number Question number 34. The following information is available for SS Limited. Following information is available for SS Limited. Question number 35. Sorry, question number 35. This question is important. It was asked in November 2022 exam for 10 marks. And you will be able to solve. Don't worry. Following information is available for SS Limited. Profit volume ratio is given 30%. Means contribution upon sales is given. Operating leverage is given 2. Financial leverage is given 1.5. Loan is given rupees 1,25,000. Post tax interest is given. Oh my God. Post tax. Underline post tax. Many students made mistake because they took it as an interest rate. It is not interest rate. It is interest net of tax. It is interest net of tax. So I want to ask you, the intelligent student, if tax rate is 30% and post tax interest rate is 5.6%, what will be the interest rate on loan? What will be interest rate on loan? 5.6% is I into 1 minus T is 5.6%. Tax rate is 30%. So interest will be 5.6 divided by 1 minus 0.3. Is it 8%? 8% is the actual interest rate. After deducting tax shield, you get 5.6%. Now you are given market price of the share is 140. Market price is 140 and P ratio is given 10. Market price MPS divided by P ratio. Yes, answer my question. What will you get? One student is saying we will get EPS. You are right. So once you get EPS, you will be able to answer this question. Prepare the profit and loss statement of SS Limited. Profit and loss statement, and then find out the number of equity share. So what is my starting point? I will be able to first find out the interest on loan. Can I find interest on loan? Which will be 8% of 1,25,000. From interest and financial leverage, you can find EBIT. EBIT and operating leverage, you can find contribution. Contribution and profit volume ratio, you can find sales. And then we can prepare one income statement. We will get earning after tax. Earning after tax divided by EPS will give you number of equity share. Is it right? So write down the answer. First you write down which is my starting point, otherwise you can't solve the problem correctly. Pre-tax interest rate is equal to question from November 2022 exam. Pre-tax interest rate is equal to post-tax interest rate upon 1 minus tax rate. Post-tax interest rate upon 1 minus tax rate. Yes, come on, answer. So you have to write everything in detail. 5.6 divided by 1 minus 0.3. So that will give you 8%. That will give you 8%. Then write down next one. Interest on loan. Interest on loan. Loan is 1,25,000 into 8%. 10,000. So now I will use rupees 10,000 interest. I will use financial leverage and find out EBIT. So next heading write down calculation of EBIT. Next heading calculation of EBIT. Calculation of EBIT. So under that you write down equation, write down first financial leverage 1.5 equal to EBIT upon EBIT minus interest 10,000. So you do the cross multiplication. 1.5 EBIT minus 15,000 is equal to EBIT, and then you deduct EBIT from 1.5 EBIT. You will get 0.5 EBIT is equal to 15,000. So my answer is EBIT is how much? One student is saying 30,000. Very good. Amazing. On the screen, check the answer. 30,000. Don't write directly in the exam if it is a 10-mark question. Otherwise, you might lose marks. My job is to instruct you. Your job is to follow. Once you got EBIT, now write down the next heading, calculation of contribution. Calculation of contribution. Which leverage you will use for getting contribution? So write down operating leverage is equal to contribution upon EBIT. Please pay attention, please be alert, and you will understand. Don't take this question lightly, already 10-mark question in the exam. So I will ask you now, give me contribution amount. 2 is equal to C by 30,000. When you solve it, you get 60,000. Contribution is 60,000. Please move ahead. PV ratio is given 30%. PV ratio, profit volume ratio, is equal to 30%. Profit volume ratio is 30%. Contribution is 60,000. So my question to this batch of highly talented students, what will be sales? Sales will be how much? Contribution is 30% of sale. So sales will be 60,000 divided by 30%. Is it 2 lakh rupees? Sales will be 2 lakh. Sales will be 2 lakh. Now you can prepare profit and loss statement. Write down statement of profit and loss. Statement of profit and loss. This is a highly tested question in the exam. Right hand side rupees. Point number A. Point number A, write down sales 2 lakh. Point number A, sales 2 lakh. Now if PV ratio is 30%, what will be variable cost to sales ratio? If PV ratio is 30%, what will be variable cost to sales ratio? 70%. Write down 70%. Otherwise, you can write it as a balancing figure by first writing contribution. So write down, please write down, don't talk, contribution 60,000. You can't get a simple question than this. Now please complete yourself and reach earning after tax. Reach earning after tax. Complete the table, reach earning after tax. Done. So we will write first EBIT was how much? 30,000. So fixed cost will be balancing figure 30,000. Or if you want to write, you can write in bracket EBIT minus contribution. So it should be contribution minus EBIT, sorry. Fixed cost is equal to contribution minus EBIT. Do you agree? So what is the next thing? Interest. How much was the interest? 10,000. What will be EBT? 20,000. What is tax at the rate of 30%? Tax at the rate of 30% will be how much? 6,000. So my question was, what is earning after tax? So this is your first answer, 5 marks if you reach up to this point. Okay, 5 or 7 marks you'll get. And there is one more question, how many number of shares are there? So write down below. First, I will find EPS. And to find EPS, what they have done? They have given you MPS and P ratio. In the ratio analysis chapter, capital structure chapter also, you might have seen EPS is equal to MPS by P ratio. EPS equal to MPS by P ratio. 140 divided by 10. 140 divided by 10. 14 rupees. Shabash. Welcome. Very good. Now what was your earning after tax in the previous table? 14,000. And how much is EPS right now? 14. So can you find out number of equity shares for me? Write down number of equity share equal to number of equity share equal to number of equity share equal to EAT upon EPS. Please write EAT upon EPS. EAT is how much? EPS divide 14,000 divided by EPS 14. Answer 1,000. You will get 10 marks. Is it right now? Question number 35 is over. Another highly tested question in the exam, which is very important for your future exams, is question number 17. So I would request all of you to come to another important question for the day. Question number 17. Variety of questions you have to solve. All these questions have come in the past examinations and they can be asked again, and there are different varieties of questions. So are you ready? Yes. Fully ready? Are you with me? Don't go behind, don't go ahead. Okay. Keep question number 17 in front of you from our book. A firm has sales of rupees 75 lakh. Variable cost is 56% and the fixed cost is 6 lakh. So you can find out what is EBIT, what is contribution, etc. It has a debt of rupees 45 lakh at 9% and equity of rupees 55 lakh. You are required to calculate and interpret the firm's return on investment. ROI means return on investment. Does it have a favorable financial leverage? Does it have a favorable financial leverage? Very good question. So when will a firm have favorable financial leverage? When return on capital employed on pre-tax basis is more than rate of interest. So this is called favorable financial leverage. Third question is, if the firm belongs to an industry, so you have to compare with industry also, whose capital turnover is 3, does it have a high or a low capital turnover ratio? So the formula is sales divided by capital employed. Another company or other firms in the industry has a capital turnover of 3 times. We have to compute the capital turnover ratio of this firm. If it is higher, then we will say it has a high capital turnover than the industry. And if the answer is less than 3, we will say it has a lower capital turnover ratio than the industry. Here the capital employed would mean debt of 45 lakh plus equity of 55 lakh. 45 lakh plus 55 lakh, 1 crore. So what is the mistake the student commit here? They only take equity capital 55 lakh. So you will lose 2 marks. Each question has 2 marks weightage. Total weightage on this question when it was asked in the original exam was 12 marks. And you will see there are 6 or 7 parts in this question. So it can be at least for 10 to 12 marks. Next question is bonus mark for you. Operating, financial and combined leverage of the firm. Next question will test your understanding of this chapter. If sale increases by 10%, by what percentage EBIT will increase? I will ask you a question. Please wake up and reply. Which leverage measures the relationship between sale and EBIT? Operating leverage. So if sales changes by 10%, by what percentage EBIT will change? Will be equal to 10 multiplied by operating leverage. 10 multiplied by operating leverage. Formula was given to you some minutes back. At what level of sale? At what level of sale the EBIT of the firm will be equal to 0? Which leverage connects sales with EBT? EBT. Please do not answer in a hurry. Already I have given you the theory in detail. Sales and EBT. Which leverage connects sales with EPS? Okay, forget EBT. Sales and EPS. Because after EBT we compute the EPS only. Combined leverage. So first thing is we will use combined leverage here. EBT of the firm will be equal to 0 means What is the percentage decline in EPS? 100%. Percentage decrease in EPS would be 100%. So 100% divided by combined leverage will give you percentage decrease in sales. Is it right? Your existing sale is 75 lakh. 75 lakh minus percentage decrease in sale. Everything will be dictated. Don't write. 75 lakh. First understand. Okay, we are not here to mug up the topic. For that there are other classes. Okay. Some are very nearby also. Combined leverage measures by what percentage EPS will change if sales changes by 1%. So if I want to know by what percentage sales will change, you have to take change in EPS divided by combined leverage. So this will give me percentage fall. Question is what level of sale? What level of sale means your existing sale minus percentage decrease will give you revised sales at which EBT will be 0. If EBT is 0, EPS will be automatically 0. Okay. Next point. When it comes to applying intelligence, you people go on back foot because our education system has become a rote learning exercise. Okay. If EBIT increases by 20%, by what percentage EBT will increase? One more time. Which ratio links EBIT with EBT?
The financial leverage.
Financial leverage. So if EBIT increases by 20%, by what percentage EBT will increase? 20 multiplied by financial leverage. If you can understand this answer, it means you have understood this topic. Okay, rest is only practice. So start. First I will find out various numbers in profit and loss statement. Okay. So let us start. First we'll write down step 1, statement of profit and loss, because all figures will come from this working only. To answer the different questions, I will require EBIT figure, EBT figure, contribution figure. So that will come from statement of profit and loss. So first I will give you the chance to complete sales less variable cost. You have to complete the table. Contribution less fixed cost, because when you will try you will learn more. EBIT less interest, EBT. Don't go by rote learning. Okay, don't mug up things. This is a financial management subject. You have to understand it. You have to feel it from inside. So I have given you a format and you have to finish it. Time allowed 15 seconds. Okay, time to check the answer. Sales 75 lakh. Variable cost is 56% of sale. 42 lakh. Contribution will be fixed cost. EBIT. Interest 4 lakh 5,000. EBT. Very good. Close. this table. Tax is not given, not required. Now one by one, first question is what is ROI? ROI means return on investment. So write down calculation of return on investment. Now we have two approaches here. One is called long term fund approach, means we will take equity shareholder fund plus debt fund also. How much? And here we calculate what is called ROCE pre-tax. This will help us to check whether financial leverage is favorable or not. And the formula for this is EBIT upon long term capital employed. Long term capital, write down. Long term capital employed, that is equity plus debt. Equity plus debt. Now where is EBIT? Left side. You can see this 27 lakh. Equity is 55 lakh plus debt is 45 lakh. That is 27%. Now you also write ROCE post tax will be equal to ROCE pre-tax into 1 minus tax rate. ROCE pre-tax into 1 minus tax rate. So you can save time. 27 into 1 minus, anybody for tax rate? Wait, there is no tax rate. Okay, tax rate is not given. So you can just delete it. Then write down one more thing, write down. Second approach is, if tax rate was given, then you do it. Okay. Equity shareholder fund approach. Is equal to, so because we don't have tax, so EBT will take divide by equity shareholders funds. Give both answer. We don't know what they want. So answer is 22,95,000 divide by 55 lakh into 100.
41.73%.
Approximately write down 41.72%. Okay, no problem. We are not a science student. Remember, we are a commerce student. Commerce student is happy with 42% return also. Okay. Point. What is this? Are we launching a rocket?
No, sir.
Does it have favorable financial leverage? Test your intelligence. Is the ROCE pre-tax
Yes.
more than the rate of interest the company is paying?
Yes. 3 times.
So it is earning 27% using the borrowed money,
Borrowed.
but paying only an interest rate of 9%. Is it right? So write a note. Note, write down. The firm has favorable financial leverage because ROCE is greater than rate of interest. ROCE is greater than rate of interest. Also, we can see that return on equity is greater than return on capital employed. Return on equity is greater than return on capital employed because the excess return earned over the rate of interest, excess return earned over the rate of interest belongs to equity shareholders. Belongs to equity shareholder. So that was my second question. The firm belongs to industry whose capital turnover is 3. Does it have a high or a low capital turnover ratio? So answer of this part, write down. Capital turnover ratio. Capital turnover ratio of this firm is equal to sales by capital employed. Sales by capital employed. Sale is how much?
Sir, sale is 75 lakh.
And capital employed is?
Sir, it is 1 crore.
55 lakh plus 45 lakh, 1 crore. We'll take long term, okay? Not just equity but debt also. So that is 0.75. That is 0.75. Note, industry capital turnover ratio is 3. Hence, this firm has lower capital turnover. Hence, this firm has lower capital turnover. So that was my question number 3. Now, next question is very easy. Operating financial and combined leverage. Write down. Operating leverage formula. Contribution upon EBIT. So tell me how much was the contribution in your first answer?
So it is 33 lakh.
33 lakh.
EBIT
And how much was EBIT?
27 lakh.
27 lakh.
That is 1.22.
1.2222 times. Then financial leverage. Formula.
EBIT divided by EBIT minus interest.
So we can write EBIT divided by EBT. EBIT minus interest is EBT. 27 lakh divided by 22 lakh 95,000.
1.18.
1.18 approx.
Yes, sir.
Up to this you have done.
Yes, sir.
One next, write down below that
Combined.
combined leverage. Contribution upon EBT. Contribution is how much?
EBT
33 lakh. Contribution upon EBT. EBT is 22 lakh 95,000.
22 lakh.
Up to 4 digits in decimals.
1.438 approximately.
438.
8.
Or there is a shortcut also. Or operating leverage into financial leverage. How much is operating leverage? 1.2222.
1.222.
And financial leverage was 1.18.
1.439.
So approximately 1.439. Both are okay. Whichever you want to use. That was my question number 4. Right. Question number 5. If sale is increased by 10%, by what percentage EBIT will increase? So write down percentage increase in EBIT is equal to percentage increase in sales multiplied by into operating leverage. Very good. What is percentage increase in sale? 10. Operating leverage 1.2222. 12.2222%. Done. If you know the concept, you can solve easily. Next question is, this is over. At what level of sale, so we have to find sales, EBT of the firm will be equal to 0. So here we are going to apply combined leverage. Okay. So write calculation of revised sales level at which EBT will be 0. Very few students are able to answer this question correctly. So first you write down point number A, percentage decrease in EBT or EPS. If your EBT becomes 0, EPS will be 0. Percentage decrease in EPS will be 100%. Only when the EPS decreases by 100%, it will become 0. Point B, combined leverage 1.439 on the left side, 1.439 you can see. So point number C will be percentage decrease in sales. Percentage decrease in sales, A by B. So that is 100 divided by 1.439. Write in 4 digits, 69.4927%. So sales, if declines by 69.4927%, your EPS will decline by 100%. Question is not percentage, question is revised sales amount. So point number D, revised sales amount. What is your existing sales? 75 lakh minus 69.4927%. So write 22,92,000 approximately. Whatever you get, write approximately in bracket because of rounded off.
22,880.
Yes, 22,90,000 you can write. Because of rounding off, there is a difference. Whatever you are getting, write down bracket approximately, write down. Okay. Because all these numbers that we have used are rounded off in 2, 3, 4 digits. So, and the amount is huge, 75 lakh. So you get a difference of few hundred to few thousand rupees here. Anyway, last question. If EBIT increases by 20%, by what percentage EBT will increase? So write down last answer. Percentage increase in EBT is equal to percentage increase in EBIT multiplied by which leverage? Financial leverage. These are some basic questions which they always repeat in the exam. So that they have given is 20
So
and this is 1.18,
23.6%.
23.6% approximately. Okay. This wonderful question is over. Now one more different type of question they have asked in the exam, and that is question number 18. This question, write down in bracket past exam question also. It was seen in November 2019 RTP, but this question has been asked in earlier exams also, and they are going to repeat it again. Question is again different from the previous problems that we have solved. The following summarizes the percentage change in operating income. Percentage change in operating income means percentage change in EBIT. So this is percentage change in EBIT column. This column is percentage change in sales column. So tell me which ratio deals with percentage change in sale and percentage change in EBIT. Come on. Sales and EBIT, operating leverage. And what is the formula for operating leverage when you are given percentage change in EBIT and percentage change in sale?
Percentage change in sales.
Percentage change in
EBIT.
EBIT upon percentage change in sales. So if you know that, then you see a bonus mark, 2 marks bonus. This time they have given you one more concept called beta. So beta is a measurement of risk.
Oh,
Beta is a measurement of risk. Higher the risk, higher the beta. Higher the risk, higher the beta. Okay. In one earlier chapter, those who have studied cost of capital chapter, this term beta was used in calculating cost of equity, CAPM formula. Cost of
beta into RM minus
equity under CAPM is RF plus beta into RM minus RN. Okay. Revision of revision. So there are 4 firms: ABCD, change in revenue, change in EBIT and beta. First question, compute degree of operating leverage. For each firm, comment also. So in comment what you have to do, which firm is more risky, which firm is less risky. And then use the operating leverage to explain why these firms have different beta. Why these firms have different beta? Why these 4 firms have different level of beta? So let us first write down in the notebook calculation of operating leverage. For this question, the formula to be used will be change in EBIT upon change in sale. Okay. If you try to apply contribution upon EBIT, you will not be successful. So write down 3 columns. Firm, calculation. Under calculation, write down percentage change in EBIT upon percentage change in sales, and the last column operating leverage. Presentation is an art that gives you some extra marks. So make tables wherever possible, write calculations every time. So first keep one line blank and write down A limited, B limited, C limited, D limited. For A limited, percentage change in operating income is 22 and divide by 35. So how much is the answer? 0.63. Don't multiply by 100. 0.63 times. Operating leverage is written in time, so we don't multiply by 100. Okay, next one. Try little fast now.
Okay.
35 divided by 24. 1 point something.
1.46.
Okay, 2 digits are enough. 26 divided by 29.
0.89.
0.89. Then last one, 30 divided by 32.
0.92. 94.
0.94. The answer is not over. Below that you have to write comment also. This is highest, B, and I think A is lowest. So write down comment. I'll dictate. Write down. Everybody ready? Write comment dash. B has the highest operating risk. B limited has the highest operating risk. B limited has the highest operating risk. Whereas A limited has lowest operating risk. A limited has lowest operating risk. A limited has lowest operating risk. Then write down next line. Tutorial note in bracket not for exam. Tutorial note in bracket not for exam. The question seems to be wrongly drafted. The question seems to be wrongly drafted because operating leverage cannot be between 0 and 1. Operating leverage cannot be between 0 and 1. But in the given question, the operating leverage of A limited, C limited and D limited, operating leverages of A limited, C limited and D limited are between 0 and 1. Are between 0 and 1. So institute, they have just given some random figure in the question
Just to calculate.
just for calculation, but intelligence is missing there because it can't be between 0 and 1. Between 0 and 1 means your EBIT is higher than contribution, which is not possible because contribution minus operating fixed cost is EBIT. So if I apply the formula contribution upon EBIT, it can't be below 1, between 0 and 1. Okay, so anyway, so we have written the comment. Now the next question was why these firms have different beta. So write down one small note for that. Answer of part 2. Beta is a measurement of risk. Beta is a measurement of risk. Beta is a measurement of risk. Operating leverage measures business risk. Operating leverage measures business risk. Higher the operating leverage, higher the operating leverage, higher the business risk, higher the operating leverage, higher the business risk, and higher the beta. Higher the operating leverage, higher the business risk, and higher the beta. We can see that, next line, we can see that beta of B limited is highest. We can see that beta of B limited is highest because its operating leverage, is highest, is right. Also beta of A limited is lowest. Also beta of A limited is lowest because its operating leverage is also lowest. Because its operating leverage is also lowest. Okay, so there is a direct relationship between operating leverage and beta. Okay, other things remaining constant because there are other factors also which can affect the calculation of beta. Actually, beta is not a part of your syllabus in detail. Okay, any query now? No query. Next question, try classwork. Question number 20 for classwork. Please try yourself. I'll just come in 2 minutes. Okay, let us try together. Prepare income statement of A and B. Financial leverage is given, interest is given. So using these two, you can find EBIT. EBIT and operating leverage you can use and find contribution. Contribution and this variable cost to sale you can use and find sales figure. And therefore you can prepare your income statement. Is it right? So first you write down. If you have done, check it. If you have not done, do it now. First step 1 will be calculation of EBIT. Calculation of EBIT. A limited, B limited. Financial leverage is equal to, the formula is financial leverage equal to EBIT upon EBIT minus interest. For the first firm, financial leverage is how much? For the first firm A, financial leverage is how much? 3:1. So 3 is equal to EBIT upon EBIT minus interest is how much? 20,000. Anybody who has computed the EBIT of A limited? So one student is saying 30,000. Next column 4 is equal to EBIT upon EBIT minus interest of second firm is 30,000. Anybody who got the answer? EBIT equal to 40,000. 30 and 40. Step 2, calculation of contribution. Now we have EBIT, we have operating leverage. Can we compute contribution?
Yes, sir.
Operating leverage is contribution divided by EBIT. Operating leverage is 4. equal to contribution upon 30,000. So contribution of A Limited is how much? Second form is 5 is equal to contribution upon 40,000. So contribution is 2 lakh. I think you must have done up to this. Yes, this was also an exam question some years back. Step number 3, write down calculation of sales. Right hand side, 2 columns, A Limited, B Limited. First point A, contribution. Contribution from step number 2. In bracket step number 2, write nicely. One day you have to revise also. 1,20,000 and 2 lakh. Point number B, variable cost to sales ratio is how much?
Sir,
66 2 by 3% and 75%. Wait. So can I say contribution to sales ratio? If variable cost is 66 2/3%,
minus 100 minus that.
so contribution to sales ratio will be 100 minus point number B.
33.333%.
Very good. 33 1 by 3%. And this will be 25%. Point number D, sales. This way write nicely. A divided by C. 1,20,000 divided by 33 1/3%.
3,60,000.
3,60,000. Next one. 8 lakh. So now we have got all the missing data. We can find out some more missing data in the table directly. Okay. Are you ready?
Yes, sir.
So write down income statement. Right hand side, 2 columns. A, B. First write down point number A, sales. How much sales you have computed? 3,60,000 and 8 lakh. Very good. Okay, so reply fast because most of you have already done. Less variable cost. 66 2/3%. 2,40,000. 6 lakh. Contribution we have computed. 1,20,000 and 2 lakh. Wait, point number D, less fixed cost.
EBIT balancing figure.
You can say balancing figure. And point E, write down EBIT, which we have computed. How much was that? 30, 40. So tell me, fixed cost balancing figure is how much? 90,000 and 1,60,000. So what is point number F? You will write less interest, which is given. How much? 20,000 and very good. Point number next. EBT 10,000, 10,000. Tax at the rate of 45%. 4,500. 4,500. Therefore, earning after tax 5,500. 5,500. For this much effort, you will get 4, 5, 6, 7, up to 10 marks. Okay. Done. Any query on this? Similar questions are asked in the exam with different figures. Now come to question number 11. This is another way of asking a question. Question number 11. Okay. Betatronics Limited. Which company? Betatronics has the following balance sheet and income statement information. So this time they have given you a full balance sheet Share capital 10%, debt, retained earning, current liabilities, fixed asset, current asset. Income statement, sale, operating expense, underline including 60,000 depreciation. Doesn't matter. EBIT, directly EBIT. Less interest, EBT, tax, earning after tax. So in this question, they have not given contribution. Let us read and see can we get it. Determine the degree of operating, financial and combined leverage at the current sales level if all operating expenses other than depreciation are. So here you see this is 120
So
minus 60 depreciation. So 60,000 is variable cost. Contribution will be 280. Just unnecessary torture to the student, okay? But some student will become a repeat customer of the institute because of this. If the total asset remain at the same level, but sales increase by 20% and second decrease by 20%, compute the EPS at the
combined leverage.
new sales level.
Combined leverage.
So we can find out by applying the combined leverage formula. Percentage change in sale and change in EPS, these two variables are connected by a leverage called combined leverage. So 20% multiplied by combined leverage will give you percentage change in EPS, and then you can find out the new EPS level. Is it right? Say yes.
Yes, sir.
Louder.
Yes, sir.
That's better. So write down. First question is compute the degree of operating, financial and combined leverage.
Sir, financial view.
Degree of operating, financial and combined leverage one by one. First you write down calculation of operating leverage. What is the formula for operating leverage?
The contribution upon EBIT.
Contribution upon EBIT. But contribution is not given directly. Sales is given
Yes, sir.
3,40,000 and variable cost is 1,20,000 is the total operating expense minus 60,000 depreciation. Minus 60,000 depreciation. This is depreciation. And that you divide by EBIT, which is given 2,20,000. So answer in times
1.2726.
1.2727 times. Second, write down calculation of financial leverage. Formula, anybody formula?
EBIT upon EBIT minus interest.
EBIT upon EBIT minus interest. Or you can write EBT because in the question EBT is given to you. So no need to do any extra work. EBIT is 2,20,000 and EBT is 1,60,000. Can you please reply 1 point how much?
1.375.
375. Okay, wait. Combined leverage. We'll multiply the two answers is equal to operating leverage into financial leverage. Operating leverage 1.2727.
1.75.
Financial leverage 1.375. Kindly reply.
So 1.75.
So 1.75 approximately. I will require this number in subsequent calculation. Okay, 1.75. So this is your first question. Compute the three leverages already done. If total asset remain at the same level, sales increase by 20% or decrease by 20%, compute the EPS at the new sales level. So we write down answer 4. New EPS level if sales first decrease by 20%. First point A, write down percentage decrease in sales 20%. Combined leverage. How much is combined leverage? 1.75. So can I find out percentage change in EPS? Sales versus EPS is linked through combined leverage. Okay. Dear student, please reply. 20 into 1.75. A into B. Is it 35%? Point number D. Do we have any tax in this problem? Yes. First I have to find current EPS, which we have not done actually. Current EPS is 1,04,000 is the earning after tax, and the number of share in the balance sheet is 80,000. 8 lakh divided by 10. 8 lakh divided by 10, 80,000. So can you guess what is your current level of EPS? Is it 1.3? So point number E, write down new EPS. Revised EPS is 1.30 minus 35%. 0.85 approximately. Answer is not over. Why? They have also asked you if sales increase by 20%. Write down last step. New EPS if sales increase by 20%. Okay. Right hand side amount. First point A, percentage increase in sales 20%. Point B, combined leverage. Combined leverage is how much? It's given in the problem. Both increase and decrease. Point C, percentage increase in EPS. A into B, 35%. And point D, new EPS or revised EPS. New or revised. So existing EPS was how much?
1.3.
On the screen below, 1.30. So 1.30 plus 35%.
1.75.
So 1.76 approximately right now. Is it right? This way you can do using the knowledge of leverage. Otherwise you can prepare the full table. You can prepare profit and loss statement. Sales is 3,40,000. You can make one column less by reducing by 20%, one column by increasing by 20%. Accordingly, you have to compute variable cost, depreciation, fixed cost, interest. So that will take a little more time. Preparing a full income statement will take more time. If you have idea of leverage, you can do it faster. So that was a very important question number 11. Now we'll come to question number 12. A company had the following balance sheet on 31st March 2021, rupees in crore. Share capital 50 lakh, share of rupees 10 is reserve and surplus 15% debenture 10 crore. So how much is the interest?
10 crore,
10 into 15%.
1.5 CR.
1.5 CR is the interest. If required, you will use it. Current liability, fixed asset, current asset. They are not required. Additional information, fixed cost per annum excluding interest, means operating fixed cost. 4.
4 crore.
Then variable operating cost ratio. Variable operating cost ratio means variable cost to sales. Variable cost to sales is 65%. And total asset turnover ratio is 2.5. On the screen, asset is 20. Asset turnover ratio is 2.5. So sales will be how much? Anybody?
20 divided by 2.5. 8 crore.
Sales will be how much?
उल्टा होता है.
Sales divided by assets is called asset turnover ratio.
20 into 2.5. 50 crore.
So sales will be equal to asset turnover ratio 2.5 into 20, 50 crore. And once you get the sales figure, you will get variable cost here. If you get variable cost, you get contribution. Contribution minus fixed operating cost. You will get EBIT. Here it is interest. 1.5 crore. You will get EBT minus tax. You will get EAT. And then you can compute the EPS, operating leverage, financial leverage, and combined leverage. What a simple question. Is it right? This question is in the study material. RTP May 19, July 21 exam for 10 marks. So we have covered in one question exam, RTP and study material. So first write down step 1. Calculation of sales. You have to know the formula of asset turnover ratio to solve this question, which is covered in ratio analysis topic. The formula for asset turnover ratio, because student what they do, they take asset upon turnover. Don't go by the name. It is sales upon assets. It should be average asset, but average cannot be calculated. So it's okay. This is 2.5 divide equal to sales upon total of the asset side is 20 crore. Therefore, sales equal to rupees 50 crores. Any query up to this?
No, sir.
Why no?
Because
We have understood.
yes, sir.
Have you understood?
Yes, sir.
Okay. The question is calculate the following and comment also. So some comment also we will write at the end. Next heading write down calculation of first question EPS, comma, second question operating leverage, comma, third question financial leverage, and fourth question combined. Always write a nice heading. Okay. So therefore, we'll prepare a small table first. Start with which number? Sale. So sale in rupees in crore, write down at the top. At the top right hand corner, rupees in crore. What is the sales we have computed?
50 crore.
50. Less. What is the variable cost to sales ratio in the problem?
Variable cost to sales ratio is
65% into 50 crore.
50 into 60.
That is
32.5.
very good. Point number C.
70.5.
Contribution.
A minus B.
A minus B.
17.5.
Then point D, less operating fixed cost, which is given in the problem. How much?
Sir, it is 4 crore.
4. Point E, EBIT, speed. Increase the speed now. The purpose of practice is to increase the speed. Less interest. Go to balance sheet. 15 crore into 15% into 10 crore. So interest you are paying is 1.5 crore. Then you write down EBT
EBT is 12.
is 12. E minus F. Then write down less tax at the rate 30%. 3.60. Correct? Easy question.
3.6.
Earning after tax 8.4. Number of equity shares
8.4. Number of equity shares.
go to balance sheet and search. Number of equity shares are 50 lakh.
50 lakh. Given.
So 0.5 crore in crores write down. In crores. So it is 50 lakh, which means 0.5 crore.
16.8.
So can you tell me point number next K EPS in rupees? I upon J.
16.8.
Is it rupees 16.8?
Yes.
Then write down operating leverage.
16.8.
Operating leverage will be point number C divided by point number E. Contribution upon EBIT.
Operating leverage.
17.5 divided by 13.5.
Contribution of
1.296 times. Very good. Now come to next. Financial leverage.
LM. E divided by G.
So what is the formula you'll use? E divided by
G.
G. Answer
1.125.
1.125. What is the next formula?
MM.
Combined leverage. Just multiply L into M. 1.458.
into M.
Right. Comment. Comment write down. I'll dictate write down. Okay. Operating leverage measures operating risk, because there is nothing to compare in this problem. Financial leverage measures financial risk. Financial leverage measures financial risk. Combined leverage measures operating and financial risk. Combined leverage measures operating and financial risk. It measures the impact of change in EPS. It measures the impact of change in EPS due to change in sales. It measures the impact of change in EPS due to change in sales. Okay. So this is the comment for this question. Now we'll take a break.